What's happening, guys? It's actually been a while I came here on this platform. I've been trying to fix some things, trying to have time for myself, trying to make money and so on. Well, it's your guy J, CEO FX Terminators with another video. Yeah, so in this video I'll be giving you a trick on how to make use of the Fibonacci tools, making use of it to get entry levels, that's daily entry levels, and exit levels. You get, so I'll as well be giving you an idea on how to set up the Fibonacci. You get, so when you're able to set up the Fibonacci, you can now be able to take your entry levels and also your exit levels. So without saying much, let's get to this video. Welcome back, guys. So the Fibonacci tools is something I expect every technical traders to make use of, because it's a tool that usually works let's say 80% of the time in the market. You understand? Personally, I make use of Fibonacci. You understand? I use it as my entry levels. I use it as my exit levels. So I even currently use Fibonacci. I blended Fibonacci with my current strategy that I make use of to trade gold, USDCAD, and USOIL. So the good thing about Fibonacci is that you can make use of Fibonacci on any currency pair or any asset or any instrument. You understand? So you can use it to identify retracement level. You can also use it to identify extension levels. You get, so it's as simple as that. But I'm sure at the end of this video you're going to learn a whole lot of things that I know that you may not know about. You understand? So this trick I currently make use of is something that I have been using for a very long time. You understand? I've been using it for a very long time. I just recently stopped using it because I was trying to restructure my strategy. But now I've done it in a way that everything work hand in hand. You understand? Alongside with my main strategy. So I'm sure that you're going to learn new stuffs and make money off it. So let's head on to the chat. Yeah. I want to start by setting up the Fibonacci because that's the whole instrument, that's the whole tool we're going to be making use of. So now, in setting up the Fibonacci, yours can come as a default in this way. You understand? So this is my own default settings of the Fibonacci. I'm just going to do some little adjustments on the settings. So let's go to the properties. So on the properties, we get to the levels. So this is the normal levels that comes with this is default levels that comes with the Fibonacci. The only stuff I changed there was the color of the Fibonacci. Yours is going to come in yellow, but mine I've given it this color because it's my own preference. So now the only level we're going to be adding on this Fibonacci is just the 0.79 level. You understand? So under the description, I'm going to call it 79%. So this that I've done on the 0.79 level is what I'm going to do on the other levels. That's approximating it and turning into percentage. So let's get to the first one. So we are going to ignore the 0. So let's start with 0.236. So description is what 0. That's 24%. You understand? So the same thing we're going to do down here. Here we have it. We still have it as what 38%. Then this we still have this as what 50%. I'm not changing the level. What I'm changing here is just only basically the description. You understand? So yeah, I don't call it 61.8. You understand? Because this level is seen as a golden level for me. So I call it 62%. You understand? Then for 100, can call it 100%. So you get the idea. Let's leave the remaining. The remaining, we don't have any business with the remaining levels. What we have, the levels that we have important to us is just the 79% and also the 62%. So you click on OK. So now you've seen that it has reflected on the Fibonacci. You understand? You know, this Fibonacci, I got it from this place. That's the icon that is here. I got it from there, and then drew anyhow I want. So it's as simple as that. So this is the first thing you need to do in order to get this particular strategy. You understand? You need to customize your levels in this way. You just not put the percentage, but just get the levels right, because I have 79% and then 62%. Those are the two levels I am going to see as my golden levels or key levels. Yeah, so Fibonacci, like we know as traders, they also act as support or resistance in the market, because basically market always reacts off those Fibonacci levels. So if you're having issues finding how to get a Fibonacci, that's to get a support zone or resistance zone, you can simply make use of the Fibonacci to get those. You understand? So yeah, next we are going to be going on how we're talking on how we can now put this on chart and get those sweet entries on the chart. So let's get to that. So yeah guys, like I've said on the previous section concerning how you can actually set up the feed. You understand? So in this section I'll be telling you how you can implement this and make use of it as a strategy. You understand? So now before we can do this, there's just one requirement. There's something they require to do. So let's head on to setting up weight properties and then setting up the period separators. So now this period separator is just going to help us a lot. You understand? The duty of period separators is just to let you know when a particular day of trading has ended. You understand? If I'm trading probably March 1st, you understand? The period separator, which is identified as this horizontal line, indicates the open of March 1st trading. You understand? So the second line indicates the close of the day. So that's basically what period separators are. You understand? Indicates the open and also the close of the day. So let's get it on the chart. So click on OK. Okay, now you see that we already have our period separators implemented on the chart. So now the whole ideology behind this trick is just identifying the previous day high or low and then the current day high or low depending on the trend. So you need to also understand the market structure. Are we in an uptrend or are we in a downtrend? We never consider being in a ranging market and making use of feed. You understand? You cannot make use of feed when we see price ranging. You get? You only make use of feed when we're in a trend, either an uptrend or a downtrend. So let's take an example. Let me do some back testing. Okay, this is still on gold, 1 hour. Yeah, so now remember what I said. What are you doing as a trader? You're identifying the previous day high or low and then the current day high or low. So now let's take this example now. In this case, we see this high, we see this level as a high. You understand? We see this level as a high. And what? We see this level as a low. This high was being formed on the 15th of September. This low was being formed on the 16th of September. So now we are drawing a Fibonacci obviously from the high of 15th to the low of what? Of 16th. But in this case, we have our two golden levels, which are the 62% and the 79%. So what we are doing is waiting for price to get to either the 62% or 79%. Then take what? Take a confirmation entry from those levels. If you understand. So now, when I drew this Fibonacci, we can see that price didn't really touch the 62% at this level. You understand? It was still trading at the 50%, but never touched the 62%. And we're expecting price to at least get to the 62%, give us a confirmation candle or confirmation pattern stating that it's on a downtrend, or stating rejection of that level. Remember I said the Fibonacci retracement tools can be used as what? Support or resistance. You get? So now, in this case, we did not see price touching 62 or 79%. So we're waiting. Now, let me show you what really happened the next day. So the next day, we identified something very, very good. So imagine that this area, that's 18th, okay, imagine that 19th of September wasn't printed. You understand? Just imagine that it wasn't printed. You want to make use of our Fibonacci retracement strategy. You get? So now we see something. We see price making what? This trend here. We see price making what? Lower lows and lower highs. We have lower low, lower high, lower low, and then we had a break of this lower high, stating that we have a change in trend. Don't forget that we were anticipating a retracement to this level before a push to the downside. So now we have this level found and also this level found. So we see that price has actually broken this area of what? Resistance, and also indicating that we have a change in trend, meaning that we are not in a bearish structure, but now we are now in a bullish structure. You understand? That's bullish trend. So now, what do we want to do? Remember the whole ideology behind the Fibonacci strategy. You're just identifying the previous day high or low, and then the current day high or low. Now in this case, let's say we have let me take this back. Let me take this Fibonacci tools back. Understand? So now we have this. So by identifying the previous day low, this is the previous day low, and then the next day high. So this high, you can't make use of this level as the high. Instead, you make use of this level as the high, because this is what started the day. And to confirm that, we have our separators there to tell us that this is the high of the day. You understand? And this level is the low of the previous day. So now we're drawing our field from that low to the high. You understand? When you draw the field from the low to the high, you wait for a retracement. Now, in this case, we had market coming to our what? To our golden level 2 times. It came and touched it 2 times. That's the 62% and then the 79%. So when it came to the 62%, it gave some kind of rejection, came back down to the 79, gave some kind of rejection, went up, and then was consolidating at this level. You understand? So this alone can be used as what? A confirmation candle. So if I'm to take this trade and I'm seeing what is happening at this level, I'm seeing wicks rejection, I'm seeing bullish candles. You understand? I take it as a confirmation. But this is the 1 hour. We should go, at least we can go to the 5 minutes or 15 minutes to get a good confirmation. But what I'm seeing here in the 1 hour is basically still the confirmation to me. You understand? So now I'm taking an entry from this level or anywhere around this 62%. When I've seen these rejections at this level, coming back down, going back up, coming down, that's consolidation. When I see that, I take it as okay, we are likely to see a confirmation movement to the upside. I take my entry from this level, that is 62%, and stop loss just right below the low. You understand? You can either also put your stop loss just below this level here. You understand? But to be on the safe side, it's very advisable to take your stop loss at this level, because we may see price coming to retrace back down to dipping into the 79% before going back up. So it's always good to play safe in the market. You understand? So now, if you're to take your TP, your entry at this level, then your TP just right above this level. You understand? That's maybe at the high. You can take a partial. You can take some book some profit from this high, and then take your initial profit from this breakout structure. You understand? So it depends on your choice. Most people like to take all of that profit at this level without even getting to the initial TP. Those is also a safe move, safe act as well. You understand? But me personally, when it gets to the top side of this place, I start taking some profit. You understand? And then leave the rest to run in break even. So now, having said that, let me delete this level. Let me delete this Fibonacci. So now remember that we are still expecting price to retrace to the upside. So now I'm dragging my Fibonacci because market is still moving. We haven't broken this low, we haven't broken this high. You understand? So now we now have what? We now have price heading onto the what? Heading into the 62%. You understand? So in this case, I'm likely to take some entries from this level. You get? I'm likely to take some entries from this level, but I can't do that without the confirmation. So now we see something like this. You just see a long bullish candle and then boom, a red candle straight up. This is the 1 hour. So what you do is just go to the lower time frame, look for confirmation from that level. I'm sure there must be probably a candlestick formation at this zone before this sell here. I'm very sure. You understand? So you can use those as confirmation. Maybe use the hammer, use the doji or something like that as a confirmation. Your stop loss entry at any level, then your stop loss maybe here, that's above this high, or above the initial, that's the major high that's the swing high that we are drawing our retracement to from. So you can also do that. Then your TP just below this level, that's just on this low or below the low, depending on your choice. You understand? So guys, it's as simple as that. Try and then backtest what I've said. Remember, what you're just majorly doing as a trader is identifying what the previous day high or low and then the current day high or low, and drawing a Fibonacci, then waiting for price to get to the 62% or the 79%. So if you're able to do that, get your confirmation, get your entry, take your money. You understand? It's as simple as that. So do some backtesting, check out what I'm saying. You understand? If you don't still understand how I am able to do this, you can comment on the comment section and tell me what you feel you don't understand. I'm going to try as much as possible to attend to all comments sent on my YouTube. You understand? So guys, until then, this is the last section. You understand? It just remains for you as a trader to go and then try what you've learned from here. So until then, don't forget to subscribe, like, comment, share. You understand? So that I can get more videos just like this.